Joining us now to talk about all of the issues impacting the market is John Manley. He is Chief Equity Strategist at Wells Fargo Funds Management. Good to see you again, John.
Hi, good to see you.
All right, let's start first of all with all the headwinds that we talked about. You have the situation in Syria, you have the Fed tapering or not tapering as the case may be, and you have the economic data out there. What is top of mind for you as you put your capital to work these days?
Well, I think Syria is the short-term concern. I mean, we never really know what's going to happen, but it's made perfectly clear to us at times, and this is one of those times. So I think until we actually see some action one way or the other, the market's going to probably be a little trendless. But I think also beyond that is concerns about tapering, which has affected the bond market adversely. Again, I think this is just a phase we're going through, but those are the two things on top right now.
You know, John, from what we just heard from Eamon Javers on the timeline of this possible military action, it could coincide with the Federal Reserve meeting coming up in a few days. If that happens, how might that impact decision-making on tapering or not tapering, and just what investors should be doing?
Well, I think the way I read it, Chairman Bernanke will not taper if it has a negative impact on the economy, or perceives it to have a negative impact on the economy. So there's a whole mishmash of factors that go into this, and trying to read his mind is again, all but impossible. I tend to suspect that once it's done, once we've seen the strike, once we hear what the Fed's going to do, and I suspect it's nothing or taper light, I think that the market can move on. You know, fundamentals are improving underneath the surface, and at some point in time, they start to matter again.
So given that, where are you deploying capital? What areas do you like? Have you changed your year-end targets for the market at all?
No, the year-end target is about maybe where we are right now, maybe a little bit higher, but we set those back in October. The idea, we thought it would be a good year. It's been a good year. I don't see any reason to change that. The real big numbers for next year, we have a 2,000 target on the S&P for year-end 2014, which doesn't require a lot of dramatic input. Just get 4 or 5% earnings growth for the next year or so. Just put an average market multiple of 16 times for the last 35 years, and you're there. So I think, you know, I do think people should be buying stocks. I'd focus on 3 sectors. I'd focus on technology. It's actually the only double weight we have. It's great value. You're seeing acquisitions there. I think tech is still adding value. I like healthcare, and I also like the industrial side of the market.
You know, all of that makes sense, John, but what do you say to investors? And this is kind of an inflection point with all of these headwinds hanging over the markets. What should they do? Really sit tight and just wait and see what happens over the next couple of days, or jump ahead and make some moves?
You know, it depends where they're situated right now. I think it sounds sort of strange, but the next month or two, the market may not do very much of anything great or bad, but I think it's going to be a great buying opportunity. I still think fundamentals matter over the long run. I think these problems do get themselves resolved at some point in time. Valuations are good. The Fed's still going to be positive. I think people have to go somewhere at some point in time. I tend to think that just says take your time, pick your points, and buy the stocks or the funds you want to buy.
All right. On that note, we'll leave it there. Thanks, John. Good to see you again.
Thanks, Sue.
John Manley, Chief Equity Strategist at Wells Fargo Funds Management.